Hey traders, how's it going? I'm just about to get started into this week's wrap up. So we're just going to start off with the S&P as per usual. And as we can see here, the S&P has been an absolute sell-off over the past couple of weeks. Now, if you remember in our last videos, we're looking at these two zones here as basically supply and demand zones. So demand and supply, or support and resistance. Now, we've firmly broken below that, and we looked like we were going to be retesting this area of potential support, and we just smashed straight through it. Now the next sort of level that we have here is the 2120s, and it's not too far off to think we're going to end up there within the next couple of weeks, even a month. And if we do, it could be an area to look for potential opportunity to reverse. Now, if it doesn't present any opportunities, we're looking for certain signals. If it doesn't do that, we're not going to bother trying to force any trades like that. It's best just to try and trade with the trend in certain scenarios, and we'll see how it goes from there. Now, if we were to draw in any trend lines, we can see if there's any potential trend line support somewhere. You could sort of say 23 to 2400 area. So we could sort of end up down here as a potential bounce off this trend line. So we've 1, 2, 3 major touches of this trend line so far. We could get a fourth, and it could bounce around about this zone here, so 2364. If that's the case, fair enough. If it doesn't bounce through that, or it doesn't bounce off this line, it could just continue on straight down to this level here. And yeah, it's another area to look for potential trade opportunities. Now, if we were to see something else here, which is quite interesting, is the S&P sold off back in the financial crisis in 2007, and then basically bounced in 2009. So what's that? Almost 2 years. Now, what we've mapped out here is copy pasted this, stuck it here, and what's quite alarming is the fact that we've had this acceleration to the downside. We're just beyond halfway there to what this move was, and it's in almost 3 months. This one took almost 2 years. So you can see that there is something going on here that we're not seeing. There's something the markets are really scared of, and we're really accelerating into this move, which means that volatility is really high, and we can see that on the VIX in a second once we go over to that. And it's going to produce a lot of opportunities, both in terms of investing at some point and also short-term trading. Now, if we look at the likes of the Nasdaq, we can see that this is one of the most parabolic charts in the market right now in this tech sector. And if we look at the likes of Amazon, we can see that pretty clearly. We've went from, it's almost looking like a Bitcoin or a cryptocurrency type of chart where it's a slow advance and then goes parabolic. And yeah, it's one of those ones, one of these types of charts where you could see quite easily this heading below $1,000, or even much lower if the sell-off really starts to kick in. Now, another sector which is really sold off is the BioTech sector. If we have a look here, so since the start of October, since the whole sell-off began, this one's been hit probably one of the hardest. It's down, it's erased all gains since 2016, and yeah, it's pretty worrying to see all this sort of stuff. But at the same time, there is opportunity, probably reasonably soon, for the short term at least, to take this as a potential signal or reversals. What we'll be looking for is, see if certain support areas get rejected. If they do, we'll look for it then further signals down the road. Now, if we have a look at the VIX, this is something we've been keeping an eye on for quite a few weeks. And yeah, it's finally broken out of this pattern, retested, and started to really ramp up higher. And if the S&P starts or continues to sell off really heavily, you could see something like this move again. And if you look further back, it's not out of the realms of possibility that we get something like this again. So we've already seen it twice, we can see it again. We've got a nice elevated move, and not one that got sold off, it's one elevated and then stayed elevated. So there is fear in the market right now. So just something to be aware of if you're trading, and just don't be too aggressive with your ideas. If we look at lithium, again, massive sell-off, tanking this market as well. Not one we're really looking at for a long bias now. We were looking to see if this area was supported. It wasn't really. It got a quick support bounce and then just broke straight through. So we're not really looking at that one now. Oil is, again, very, very bearish. Monster sell-off since October. Seemed to kick off around about the same time as S&P. Now, this was a potential bounce zone, but it got broken straight through, came back up, tested as a resistance, and then started to sell off again. So this momentum could continue to the downside, and we could see the low to mid 30s for the next few weeks. It'll be interesting to see if we actually get there. Copper, it's nothing really one we're looking at. Coffee, not really one we're looking at either. It's one we're keeping an eye on. They had a new report out a couple of weeks ago, so we need to go and check that, see if anything on the fundamental side has changed. If not, then there's no potential opportunities. Bitcoin was one we did take an opportunity on. If we look here, nice fallen wedge pattern, and what we were looking for was this candle here to on the intradays to start to show signs of reversal. We seen that and we took the trade long with a stop just below here, and we got out on the intradays. If I bring those up, got out roughly about here. Now price fell down, but it's now hovering back at this price again. We could spike to 5k, which was our original target, but we want to get out because this was the pattern completion, and so basically the trade was complete. Now there was opportunity to get re-long again, but we didn't bother taking that. We just took this initial reversal move. So apart from that, the only other thing that happened fundamentally this week is something pretty huge, is the farm bill got signed. This is something that happens every 5 to 6 years or so, and so this one got passed through the Senate, and Trump eventually signed it there on Friday, or 20th of the 12th. So that was, let me check that again. Thursday. And so that basically there's a lot of stuff within that, and one of the big things that's within it is hemp. So this will be opening the doors to more hemp related stock opportunities. These sort of things is really good for that sort of area. Now there are a few different companies we're looking at right now. See if we can take advantage of them in the next few weeks, because they've went through sort of quite a big sell-off over the past little while, and so we'll be looking for a January effect type of thing, of where these being down stocks usually start to get more attention in January. So we'll be keeping an eye on them, and going forward we'll just keep you updated. So I hope you enjoyed this, and have a good Christmas and everything. Happy holidays. Not going to be very much over the next week, so there's not very much opportunity. So enjoy yourself, and we'll see you in the next one. Thanks.